Hi traders, and welcome to a new 2015 year for all of us here at the Trade Genius community. We want to thank you for being with us throughout last year's market. Obviously the ups and the downs and basically the dollar strength that took us right the way through to the final quarter. We're going to start this year with a brief overview. Of course, the market is very much focused on Russia at the moment. Everyone looking at the meltdown of the economy and then focusing very much on the oil prices. And obviously there's a dilemma now that, are Russia going to considerably reduce the supply of oil to try and help boost demand? Are there going to be sanctions further placed on Russia? Will Russia put counter sanctions on Europe? Not so likely. And what that effect will be on the Eurozone is obviously yet to be seen. But basically, although traders are focusing very much on the dollar-ruble trade, which is ranging right now between 50 and 60 essentially, it does look as if there's going to be some consolidation there, given the immense speed and strength of that rally that we saw on the dollar-ruble, obviously in the final weeks of Q4 2014. In spite of this trade, guys, I have to say that we are actually focused on two major moves in this Q1 of 2015. The first is obviously concerning the dollar and the huge amount of strength that the dollar has had over the last 6 months. Now, it looks as though the dollar is likely to have a pretty successful year in 2015. However, it seems that the interest rate hikes and the talk of really moving rates in the US towards new levels won't take place practically until Q2/Q3 of this year, which means that we have the next 3 months to possibly see a technical rebound on the dollar. That means that the dollar will not just weaken, but really just have a sort of subdued period and kind of pull itself back on the technical charts, basically in light of the immense strength that it's had over the last 6 months. And this is quite high in probability. The only problem is there is a considerable lack of alternative in the market for investors. Hence, we look at the equities markets, particularly in Europe and also in the US, obviously. And investors also having a little look at some precious metals like gold, which seem to offer small hopes of potential pullbacks there, given their drastic reduction in prices over the last couple of years. So without further ado, we're going to look at some of these dollar pairs into this week's market, and very much sort of geared towards the short and medium term. But we will say that the euro has had a particularly rough time with new lows being hit recently. And obviously you want to keep an eye on that because we're at a very, very pinnacle make or break point for those euro trades. That's the euro pound and more specifically the euro dollar. So the first pair we've picked to look at this year, guys, is the S&P 500. Okay, we can see obviously huge rallies on the S&P 500 right the way through 2014, and we did have a nice sell-off just in September, October, but that really didn't last very long, and then obviously the final quarter saw new highs being met. We can see here that we just come off the recent new highs around about the 2095 mark, and we're really tapping back onto the previous resistance just above 2063 levels, which is now a potential support. So if we don't see this price holding up for future rallies, then we can expect things to move back inside this what we call a megaphone pattern, and for prices to drop and retrace right the way down that megaphone shape. Similar situation really with gold. Gold, obviously, though, has been moving in the opposite direction, selling off for the last couple of years. And we've seen this pair now make some very small progress to the upside. It's broken out of a potential channel that it was following and honouring actually throughout the last couple of months. But we can see here the breakout took place sort of at the end of November, and it's now retraced towards the support level, which used to be a resistance price. If we see this level holding up again beyond 1200, so we want to see it confirm by breaking 1200 again. Then traders will be inclined to jump back on this trade for another wave as part of a progressive rally. Okay, so that's more specifically with regards to the gold prices. We're looking now at the euro pound, specifically because of the trade-off there between the weak pound and the weak euro. Probably the euro's had a bit of a rougher time, certainly in terms of the fundamentals and the news. The dollar's been driving most of the weakness against the pound, but really the euro has been having a very tricky and turbulent ride. That's partly because of the constant rate reductions in the Eurozone, the even more recent asset purchases and support from the ECB, who have only recently come out and said that basically they're going to continue this policy. It looks as though, as if 2015 is going to be seeing more of that stimulus, which could only threaten to weaken the euro even more. Having said that, guys, this technical support that you can see here on the chart, certainly on the euro pound, at 0.7760 offers a potential swing back up towards 0.83 levels, 84 levels, and maybe even beyond. It's a flag shape pattern, so if we don't see it breaking through this soon, you may want to consider your options and look towards the long side there for a retracement. New Zealand dollar, guys, we saw a big gap in the market last week, specifically after the new year. That gap hasn't been filled yet, and you can see that gap is also taking place on some other major pairs, such as the euro dollar. Well, now, we often like to trade these gaps. If they don't get filled within 48 hours, then perhaps you're better off selling and going with the trend. But typically within 48 to 72 hours, you can see these gaps getting filled, and they might be offering you some nice reversal prices too. So those are the major pairs which we've been covering. Euro dollar is well worth looking at in your own time, obviously, because that's showing a very, very big monthly low, and it's a triple bottom. Okay, so you want to see there that pair holds up for reversal positions. Otherwise, there's going to be a hell of a lot of shorting coming out in the market, which we will find out probably over the next week or two, and that may well sort of continue the trend for the whole of Q1 until the US starts to pick up with any more news on rates in Q2 and Q3 of this year. So plenty of time, lots to come. This week alone, we've got, of course, the US data coming out on Friday, as well as a whole wide array of news announcements to be taking place, obviously, in other parts of the world, specifically in the UK and Australia. So have a fantastic week, traders, and trade safe.